Hey everybody, this is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. Well, what an awesome day. We have had a fantastic weekend. What an just unbelievable just price action. Things are coming together so well. Had a great morning today. Went to the gym, did an hour on the stairs. It's a good workout. So had a conversation with my dad, and we calculated that it was 2 trips to the top of Burj Khalifa in an hour. So that was a pretty good workout. Oh man, look at the shape of this chart, guys. Are you dying? Are you dying? Seriously. Ethereum. We are above the 100, guys. We're above the 100. Our increasing support gave us the lift we needed to break above the resistance. This resistance was major because we needed to cross the 50. We crossed the 50 and this resistance at the same time. I'll zoom in a little bit. And slowly and surely we have marched up. And the past 2 days now, yesterday we stopped at the 100. Today we have passed it, and we will likely pass it. I've always said that it takes a large candle to break an important resistance. And the bigger the effort to get through that resistance, the more important it is. And if it's that important, we will likely find support on the other side of it. So if we break through this, hopefully we can hang on to it for resistance as a support when we turn back around. For those of you not on the pro channel, be patient, because just because we've had a sweet week, an awesome week of just pure upside, we have to come back for footing. We haven't really seen a significant change in direction since we were at below 1200. So we've moved a lot. But the thing that I am loving about this chart is that our most obvious resistance ever since the FTX drop is this point right here where we rejected off of the 50, and it was at 1320. We closed 1321 was pretty much the close. We reached up, found some resistance, and ended our candle right here. So this candle body is what I'm watching. It is most, like, we have 2.5 hours left. The high probability is that we close at or below this line, because this is resistance on our candle bodies. But the fact that we closed above the 100 means we've broken through so many things. And even if we stop here and come back for another bit of support, our increasing resistance is intact. We're above the 20, we're above the 50, and we have the 100 now that could provide support for us. So even in as little as 24 hours, we could come back and hit this, and that's just below 1300. There's a lot going on here. If we look at Bitcoin, it's not quite there, but the target is in place. This is our target. We've been saying this for quite a while. 17,800 is the number we are after. And that will coincide with a very probable rejection off of the 100. So we have moved up pretty good, and we need to have a little bit of a rest because we've just gone nonstop. If I go to the 4-hour chart, you can see that we have really rocketed up, and we have spent quite a period of searching pretty high, and our top wicks are getting long. So we're in for a little bit of red for the next several candle periods. But so yeah, we could retrace a decent amount and still be bullish. But what I really like, and take a look at this on the 4 hour. On the 4 hour, this was our death cross right here. This was the day before Christmas Eve, so December 23rd. Our golden cross happened here. This was before the whole FTX. No, wait. Nope, this was FTX. I'm sorry. This one was our build up towards a rejection off of the 50. But this was a golden cross, and after this golden cross, it resulted in a decent move. We had quite a pullback because we still had this ominous run here, and we were below the 50. There were things that could reject us. We are about to do a golden cross on the 4 hour. This is a big deal. We will likely pull back into the cross. That usually is how that plays out. So we could get down into 17,000 land again, like right in there, and it would not be a bad thing. So these are some of the things that I'm seeing kind of short term, but overall, this is a monstrous move. This exit of the red zone right here, red and yellow, is exactly what we need. The risk reward is off the charts. It's the best risk reward ratio of any of our exits to date, and there is a lot of upside potential here. So I am very excited. On the Pro channel, I was rejoicing because all of my accounts are now in the green, which is sweet. All right, so with that, let's talk about the weekly close, because that just happened yesterday. And look how pretty this is. What do you guys see? You're like, oh, that looks horrible, right? There is something here that makes me happy. First of all, we have our bottom support right here. We have so this candle right here is our swing low. We have two candles on both sides that have higher lows and higher highs. This is it. Swing low right here, green candle. And we had a rejection. So this became our swing high, and this one was not part of it, but these two candles are the swing lows to create this high. Excuse me. These are the lower candles on both sides to create this as a swing high. So now we are being pushed down. Well, we are in the midst of trying to create a new swing high, or swing low, and that would be this red candle here. This candle doesn't count, so it's these two on the left side of it, and on the right side of it, we have these ones that are in the making. And what could propel us to a higher range? So first of all, we have increasing support. That's kind of the point I was trying to make. We have a lower support, we have a higher support. So we have increasing support coming off of here. And then the other thing that we're doing is we have a match with our candle bodies. The close here was 17,108. The close here 17,088. So about 17,100 is kind of the magic number. That was the candle body resistance for this move. And what was our close? 17,127. This is an ascending triangle. We have a consistent resistance, and we have increasing support on the underside of it. So this is a recipe to move up. And in addition, we have a bullish engulfing candle closing out the week. This generally results in 1 to 4 weeks of upside. So even if it's a small week, we have movement to the upside. Let's take a step back now and see. So we are obviously in a bear market, right? There's nothing broken here. Our top side resistance is way up here. Like, we're not even close. We'd have to get above, what is this? 23,000. And that's the 50, like that's the 50 week, or excuse me, 50 month moving average. So this is a huge level. there's a lot of things we have to do. Getting above this would be a major event, but we're still in our falling wedge here. So we have some work to go, but even in a bear market, so a bear case, we have two things of blue sky that we're waiting to touch. One is our 20, which is currently at 18,344. That's a big move from here. So the foundation that we've built here, if that culminates in a move up to above 18, that's $1,000 higher than where we're trading currently. That could really move markets. We just saw a tiny little move on Bitcoin, and the altcoin market just really exploded today. We just saw everything exploding. So that would be a massive move. Our major point is this one. So this is at 18.8. This is another level that we've been watching super closely. So we have some resistance. There's nothing bullish beyond momentum to push us up and do a retest. So retesting can be really helpful, but there is a short-term move to the upside that I'm expecting. Is it enough to change everything? We'll see, because it is most likely the case that we will either hit this one or this one, and we will have some kind of rejection. And then the question is where do we find support? Do we find support again at 17,100 and then move up? That's a very possible outcome. In fact, that would probably be the most likely outcome in my opinion, because we have this dotted line, which is our center piece, and it's hitting the tops of all of our candles here. If we had some kind of a rejection, it'll take probably another move before we have the strength to cross it. But just like I've always said, any downward resistance will likely break out, because all you have to do is go sideways. At this point, we can go sideways until May of this year, and we will finally cross. That's not how this usually plays out, though. We usually meet the challenge, but we've fallen for so long, and we've put in the time for the bottom of this bear market. Everything is in pretty good shape. This bullish engulfing candle should give us the strength to at least perform a retest of these levels. The 20, we just barely had our rejection at the FTX drop. So we hadn't even touched the 20. I mean, this is arguably, so this is a break, this was support, and this was a fall through. So this was a fake out. But this happened all the way back in March of 2022. And our real loss of the 20 happened November of 2021. So this has been against us for a long time. Fake out, actual rejection, but these long-term trends, when we touch them with increasing frequency, that's how you break these. You touch them more often, and you do it in closer succession. So if in the next couple of weeks we can at least retest it, we'll have touched the 20 way more times, like twice as much as the last time we were there, and that is getting there. We're performing this. So like as we were doing the break of the 50, it was the biggest thing. That was the biggest move that has caused this most recent breakout, was touching the 50, and then we had to wait a while, and we touched it. And then we waited a lot less time, and we touched it. And then finally, we touched it in greater frequency and more times. So we were hitting it more times, and we were doing it faster. And that was the recipe we needed to break out. Same thing on the weekly. That exact same principle applies here, where we haven't touched it for quite a long time. Now we've gone quite a few weeks, but if we can touch it again, every time we do, it weakens, and then eventually we'll pop through it. So I'm thinking that our bear market is getting closer. Like there is a case. There is at least a case that this was our bottom right here. Time-wise, it would make sense. You can tell that our downward pressure is now flattening. And according to the most recent moves, I mean, we still have one more touch to go. So this dotted line could be pretty serious resistance. So we're gonna want to be very careful around this area. Once we break through and we come back and find the top of it as support, that's when we'll be kind of like, okay, it's time to increase risk a little bit more. But right now we're being careful, we're being conservative, we're watching things very, very closely. For those of you who are wondering why all of my altcoins are in the red, it's because Mexi on TradingView has a close of 9 o'clock in the morning Mountain Time. So this morning everything was just burning hot, and we've retreated a little bit in the afternoon. So that 4-hour candle that I just showed you on Bitcoin, that was red. This retreat from the highs of this morning, that's why all the alts are kind of retreating a little bit, but I'm super excited about this, guys. We're doing the right things, and this market is getting really, really close. So yeah, here we are. This candle's looking pretty ugly right now. It has 2.5 hours to go, and we'll see where it ends up. But we've had a decent move. If the move to the downside, if we find support on the 50, or if we find support on the top of this at about 16,900, right in here, then we have a chance to create a continuation. So we'll see what happens. But overall, this is really cool, really awesome. We were hoping for a breakout, and these moves, when we get out of here, it's serious business. I also wanted to point out one. So normally when we break out of a red zone, it's because the 50 is declining. In order to have a red zone, the 50 has to be decreasing and the 100 has to be decreasing, and then you pop above it. So you're kind of pushing through a downward resistance. This thing's coming down at you, and then you pop up above it and everything changes. It's very interesting and very rare that we would flip to yellow before we exit. And the reason why is because our averages are going completely sideways. Ever since this date, it was literally the end of the year, the 29th of December, you can see how our averages have taken a turn. The 200 is flatter, the 100 is flat, the 50 is extremely flat. In fact, it was actually increasing during these 3 yellow bars. And there was a period of time in the past when we did this exact same thing at the bottom of a bear market. It was right here. Yeah, see how in 2018, this 2018 and 19, this was just a clean break out of the red zone, and we just launched from there. Well, over at the COVID crash, we had a lot of things going on. Our 100 was rising, and then our 100 got above our 200, and so things were kind of all over the map, and we had this kind of period of a red zone that flipped to a yellow before we exited, and then you can just see the chart where we just really moved out. And so if there's kind of a turmoil point where we've got a red zone that flips to yellow, there's some strange mechanics happening in the market. Let's go zoom out and see. Yeah, because see even this. Oh wow, we actually did. Interesting. So at the bottom of 2015, we had a similar result. It wasn't this solid brick of red. This was our bottom. We exited the red zone here, and then we had this move. But then when we kind of got back under the 50, we had kind of a spotty yellow and red. And it's interesting that right before we had our next move out, we'd flipped to yellow. So this is a little bit more similar to what we had just done, because we were sort of in the red zone, but the 50 was rising because we had had such a good consolidation for so long. And then we kind of broke out and had a pretty awesome move. This move was from, let's see, 235 to a high of 300. So it was a solid move. We weren't quite out of the woods until we got into this area. But that's what's interesting, is that our AI had been pointing to this for months, this scenario playing out. So it'd be kind of interesting. Oops. Be kind of interesting to compare now that we've had some more time. Let's just see how this looks. Yeah, so it's kind of interesting. We had our significant drop here, our significant drop here. We had our second drop, which coincides with this. And then we had a little bit of a run fake out, and then we were looking for stability. And so here's our run fake out, and then looking for stability. And then we finally exited the yellow zone. And this is our move above the 50. And in 2015, when we finally got here, there's a difference though, because you can see our 200 is below our 100. So there was a lot more consolidation at play here. We really gave it enough time for our 200 to get down here. But yeah, anyway, we got up here. Once we were above all three averages, we were off. So we have some work to do. You know, there is some work to do, but this is it. This is the start. I can see this playing out. Maybe not just a full-on launch like this, but we are building strength, and it is tangible. All right, let's see. Okay, we'll get back to the current day. Just very cool. I'm excited to see, you know, where things are headed. This is interesting. I woke up this morning and someone was saying, "Oh, it's not your fault. I know everyone's trapped in their alt shorts this morning or whatever." I'm not sure they're following, but this is kind of the wrong time to be shorting very much. If this is the market bottom, you're in trouble if you're in a long-term short. So yeah, a couple of weeks ago when we started showing this strength, this is when we exited all of our shorts. And we cashed that, put it in our pocket, and then we've been looking for longs, and the market's given them to us. We've found all kinds of longs, analyzing altcoin market charts, and boy, what a payoff today. Very fun. So anyway, good times. We're having a good Monday. The weekly close is bullish. I'm expecting good things. If we have a temporary retreat, that's fine. The only wild card that's on the table is that there are CPI inflation data and also interest rate data. Fed Powell is doing his thing on Thursday. So the last time he spoke, this was our day, and it got really volatile for us, especially to the downside. It's hard to tell whether the numbers are getting better. I know a lot of the interest rate hikes are there. They've been announcing that we'll stop at 5 or 5 1/4, and if so, the continual, like the increase in intensity is going to go down, but not quite to a pivot yet. But these types of things are being priced in. I'm looking at this market. This is the S&P on the daily, and I see a lot of strength here. I don't see weakness. If we are pulling up prematurely, the bottom, this is a very clear swing low, and if it's higher than this swing low, then we have a higher support than 2 of these, and we are building in support. So the next question is, you know, same principle that we just spoke about earlier. We've hit this on regular intervals. This was wider, this was shorter. If we retag this in a couple of weeks, it'll be half the time. And we will likely break out if we hit this too many more times. A breakout on the other side of this, where we could pull back and hit support. This could be the start of a bull market again in the S&P. So I know there's a lot of turmoil and there's a lot of things that everyone is screaming about, but I'm just reading the charts. If I'm reading this chart, I see more positives than negative. If I read the chart and things change, more information comes and we start flipping to bearish, then I will call that out for sure. But this has more, it has more strength than weakness. I know that markets are getting a little skittish because we have big news events coming out, so I'm sure a lot of people don't want to be in an open position quite yet, but we'll wait and see how that reacts. The market structure of Bitcoin is undeniable, though. We are definitely increasing in strength, and especially Ethereum, where we are with Bitcoin, we're hoping to touch this level. With Ethereum, we're here. So the Ethereum trade is looking really nice, really, really nice. All right, that's all I've got for you today. We're going to keep watching this play out. But thanks for being here. I appreciate it. And thanks for all of you guys supporting me. I appreciate it. I know this is it's been a rough bear market, and it's not fun to be all nerdy and get into the weeds on some of this. I know there will be a lot more people when it's the wrong time to buy, but I'm glad you guys are here to see this bottom unfold. It's really awesome. Okay, we'll talk to y'all later. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.